Hello everyone, welcome to this trade breakdown on EU. In today's breakdown, I'm going to go over the two trades that I took on Tuesday the 8th of April and Wednesday the 9th. I'll share my thought process behind those trades, the rationale, and then I'll share my current expectations for the rest of the week. I'll also explain whether or not I'm going to be trading for the rest of the week and the thought process behind that decision. First of all, let's start with Tuesday's trade. I'll break down everything from start to finish, just like I always do. This was a setup I took, and I will outline everything, alongside directional bias. I gave you the directional bias, shared my expectation for price, and also laid out the exact narrative well in advance inside the group, specifically inside the daily transaction update that I uploaded on Tuesday. Some of you saw the trade unfold in real time, and that's exactly what I love seeing. That's the whole point of this community. My objective is to help you actually see what real trading looks like, day after day, from the ground up, and that's exactly what I've been doing since the first month. You know that. Yes, Monday was a loss. We took that loss together, and I took it in front of you. I also shared the reasoning behind it and broke it down for you completely. The reality is that it was a structured loss. We planned for it, it was properly managed, and it was completely in line with my framework. But then, after that, you can see that by consistently sticking to my system and my edge, I came back with two wins. One on Tuesday and another on Wednesday. Both of them were executed cleanly, and the outline and directional bias for both trades were shared live with the community. Just like that, I made profits again for the week. If you followed along and executed according to the updates and the outlines, then you are likely in profit too. But if you missed the trades, or you weren't able to act live, or you didn't know how to digest the information I was giving you, or how to navigate the transaction, that's totally fine too. After all, your job and your objective inside my videos is to learn. At this point, your focus should be on studying the breakdowns, understanding the logic, and reverse engineering the decisions and the content that I'm giving you. That's exactly where real growth happens. It doesn't happen by copying my trades or chasing them. It happens by understanding why they happened, reverse engineering my content and trades, and studying the breakdowns. When you do that, you'll see how much you improve in just a short amount of time. Now, enough of that. Let me break down this trade for you. As you know, heading into Tuesday, my directional bias was bullish. I shared that inside the daily price action update and explained the reasoning behind it. I also told you exactly what I was expecting. Long opportunities only. In the first half of the day, price was printing bearish price action on the lower time frame. But despite that, I didn't look for any trades or frame any trade ideas on the lower time frame. Why? Because at that point, there was no valid key level for me to trade from. This is where most traders go wrong. They try to trade every single candle without full context. You need to remember that to frame a trade idea, you need three non-negotiables. First, you need a clear directional bias. That comes from the higher time frame draw on liquidity, and on Tuesday we had that. My directional bias was bullish and my draw on liquidity was higher. Second, you need a well-built narrative. That's usually developed through the open high-low close framework, power of three, and so on. We had that narrative too. I explained it in the price action update. We had a clear directional bias and a proper narrative. But what we didn't have was proper market context, specifically a key level that we could use for execution or to frame a trade idea. So on Tuesday, even though we had a directional bias and narrative, the only thing missing was context. Our job that day was to wait for proper market context to form, observe what the market was doing, how that context evolved, and then adjust and trade accordingly. Because we didn't have a proper market context early on, I didn't take any trades during the first half of the day, during London Open and London Close. The only trade I took was after the New York Open, during the London Close session. That's when the market took out this low, formed an SMT divergence with DXY, and it all happened at a key time. After that, I framed a trade idea toward the high time frame liquidity, fully aligned with my initial directional bias. So, in the morning, we had a bias and a narrative, but no context. There was no key level. Because of that, I stayed risk-off. Then, during the London Close session, things started to align. Price took out this low, and that low became our key level. Like I said earlier, we had an SMT divergence with DXY. What happened is that you can see EU took out this low, whereas DXY failed to take out the corresponding high. This led to the divergence right here, which gave me the first signal that a reversal might be happening. It created asymmetrical price action, which signaled strength in EU. That was the first green light. Along with that, I also marked out the 5 AM candle as my candle range. The reason I chose that exact candle as my range edge is because it perfectly aligned with this low right here. Along with the divergence, which was a key factor, this candle range low was printed at a key time, during the London close scale zone. These three elements in price, first of all, the directional bias on the higher time frame, the narrative and this divergence, and then the timing in the key level. I was ready to look for an entry, right? Then, on the 15-minute time frame, I waited for an order block entry to form. Once the order block was confirmed, right? Let me show you. Once this order block was formed right here, I then executed this trade with a predetermined stop loss and take profit level, and it played out perfectly. Now, let's go up to the 4-hour time frame and let me summarize everything for you. Everything that happened on Tuesday. What happened is that during the first half of the day, during the London Open, London Close and New York session, we had a proper directional buy in terms of narrative. But we lacked a market context in the form of a key level and a candle range. And obviously you know that to frame a trade idea, we need a key level. That only happened after we took out this low. After that, I used this low as my key level. We had an SMT divergence, and this 5 AM candle became my candle range. Only then did I frame this trade idea. Because we didn't have any of this during the earlier price action, I just stayed risk off. Now some of you might be wondering, we had this opening gap as a key level. But the thing is, we were already inside it. Yes, it was used to frame an analysis or to frame the directional bias, but it wasn't sufficient enough to be used to frame a trade area. To frame a trade area, I needed a separate key level, and that only appeared once we took out this low. And yeah, that's the summary. Some of you took the same trade. That's wonderful. That's amazing to see because it means you're learning to think like me structurally, not just emotionally. For those of you who missed it, let me say this again. Learn from it. The whole thing is documented. Study the key levels. Study the divergences. Study the breakdowns. Study the content and understand why the setup made sense and why I avoided trades throughout the first half of the day. That's how you build skill. And that's the whole point inside my free course. If you're just here to copy my trades or chase my trades, let me tell you, you're doing it wrong and you're in the wrong place. But if you're here to learn from me, to learn about the intricacies and the details of real trading, what real-time trading actually looks like, then you're in the right place. And I can assure you that inside my videos, you'll get top-notch quality content like nothing else. I don't think anyone has been as transparent as me, breaking trades down like this, giving you these outlines, these trade outlooks, these high time frame weekly and market outlooks that I'm providing. I don't think anyone else is doing that right now. Maybe I'm wrong. Maybe you can show me someone. Now, enough of that. Let's move on. Let me break down Wednesday's trade. Now let me break down the trade I took on Wednesday. The high time frame outline and directional bias for this particular trade were also shared live inside my group. I showed exactly what I was expecting and why I was expecting it. Going into Wednesday, my directional bias was bullish, just like on Tuesday. I mentioned that I was only looking for long setups. During the Asian session, we had an expansion leg higher, which signaled to me that we were likely going to see a delayed protraction profile on the lower time frame, either during the London Open or the London Close session. But as you know, I wasn't just going to jump in randomly. I needed proper market context. At that point in time, before we had formed all of this, yes, we had a directional bias and a narrative, but the only thing missing was the market context. I waited for that to form before framing a trade idea. The first thing I noticed was a clean fair value gap, a higher time frame 4-hour fair value gap. What I expected was for price to test this fair value gap and then expand higher from there. And as you can see, that's exactly what happened. But obviously we also needed a candle range, which came from DXY. What you can see right here is that we've got this particular candle on DXY. Obviously, these two are correlated assets. We had this fair value gap on both assets. EU tested it, and DXY tested it as well. We had this clean candle range on DXY, which acted as a reference point for me. That became the context for me, and that became the context I needed. And yes, your candle range or your key level doesn't always need to be on the same asset. If it's a correlated asset and it adds structure, it still counts. For example, if price tests a key level on NQ but doesn't on ES, it still counts because those two are correlated assets. You only need one of them to either test a key level, purge a candle range, or have an SMT divergence. You need to remember that. So once DXY purged the candle range, tested the FVG, and all of this aligned at a key time, I started looking for a long setup. I waited for an order block confirmation entry to form. And you can see right here that once this candle was engulfed, with price closing above it, I then executed this trade. I took my entry right here, placed my stop loss below the order block's low, and targeted this high, which gave me a 3R trade. And that was my whole trade. Even though if we look at the higher time frame, you would see that after this trade played out, price pulled back later in the second half of the day. That's completely irrelevant to us, right? Because what mattered is that I executed the plan, I hit my target, I followed the order flow, and that's all that matters. We had a trade, we got in, we got out, and that's actually what counts. We don't care about what happens after that, right? After we've executed everything, the next job we have is simply to wait for price and wait for the next day. This is exactly what trading looks like. It's not about trying to be right all the time. It's not about chasing price. It's about showing up, planning properly, waiting for the right structure and the right market context, and executing your edge with precision and confidence. And that's exactly what we did this week, on Monday, Tuesday, and Wednesday. And that's it for the trade breakdowns.